Hello guys and welcome to another video. So in this one I want to do a small case study of the top guy on Darwinex. So his ticker is THA. He has I think $30 million under management and I want to see what makes him successful, what is his trading edge and how did he manage to attract over $30 million. I do plan on doing more of these, either interviews or case studies of very successful traders to see what made them successful and how you guys can actually learn something from those traders and maybe implement a new trading edge into your own personal trading. So the last one I did was with Vukovic. He has a revolutionary trading edge regarding social media and people's biases. He also has around $30 million under management. So that is the game plan for 2025. I want to show you guys some real traders. I want to show you their actual trading edge so that you can see what real trading looks like. And also in this video, I will show you guys my personal Darwinex track record as well as some new features that Darwinex implemented. Let's get into it. Let's get onto the PC. So we are here on the Darwinex Classic website. We go to Darwinia and we're gonna search for THA. That is the ticker we're looking for. So this is it. So Thales Research. And you can see this is the performance of THA. We can see his total equity is more than $10,000 and his Darwinia allocation is around 205,000 euros. And current investors, he has 1,043. That means $26 million under management. So it has gone down a little bit in the last year, I think. Like the high watermark was around 35 million, but again, 26 million plus this allocation is a very, very big sum. So yeah, this is the performance. Now we're not going to take a look at the ticker. We're going to actually take a look at the underlying strategy. So if we click here, this is what we want to analyze. This is the underlying strategy and we want to take a look at the performance in 2024. So you can see it right here, plus 6.2%. Very, very nice performance, I would say, for a big fund. I think this is pretty good. Again, the S&P made a lot more percentage, but when you take a look at his previous performance, you can see that he is pretty consistent. So this fund is pretty consistent throughout the years. Every single year was green, and the S&P, of course, is going to have years where it is just going to crash. So when the S&P has a bad year or a down year, you can be, well, not 100% sure, but you can be pretty sure that THA will have a green year with a good drawdown as well. So if you take a look at his maximum drawdown, it's only 15%, minus 15%. That's much lower than mine. I think mine max drawdown is around, like in the last 3 years, maybe minus 20, minus 21, 22%. So this is much better than me. And his return to drawdown ratio is, I would say, exceptional. You may see this performance, you may see plus 6.2% in 2024, and then you may say, this is very low, this is not good. But if you think about it, and if you take a look at his track record, so it goes all the way from 2015, you can see that this performance is really good. And you can see that the maximum drawdown is really low. What else can you see here? Well, you can see a lot of things, but I just wanted to give you a general introduction of this performance and what you can achieve with the trading edge that Thales uses. Okay, so Thales is an event-driven global macro strategy focusing on economic releases and monetary policy decisions. For more information on the strategy team and trading process, please visit their website. So they trade events, okay? And as far as I understood, they mostly trade central bank decisions, central bank meetings, central bank policies, okay? That is, I think, their like cream of the crop, or they get their best trading edge in those news events. And there was a big one in December. So that's where they made a very good percentage. So a Fed meeting, which was a very, very important Fed meeting. Now it is time to actually break down the trading edge. So we're gonna switch to a different tab. So what is this? Well, this is the guy that runs the Thales fund. Okay, Attu Kokkilla, I think that is how you pronounce it. Here is a little bit about him. But anyway, I'm gonna put the link to this Substack in the description of the video if you want to take a look. So Substack, I know it's not that popular yet. It's kind of like Twitter, but I would say a little bit more professional. And for finance, I think it's pretty good. It's kind of a mix between LinkedIn and Twitter. I would say it's pretty serious, and there's not a lot of like fun stuff or entertainment stuff or like trolls on Substack as there is on Twitter. And it's also not as boring as LinkedIn. Just my personal opinion. So here, Attu actually posts a breakdown of the events that he trades. Okay, so these are all breakdowns of the events that he traded. And I'm going to focus on the last one because I think that one was very, very interesting. And it is going to be the Fed December meeting. Okay, so you can see this is the introduction. So this is the post before the meeting, and this post is actually after the meeting. So let's break down the one before the meeting. And I'm going to try to explain how he trades, basically. So he gives a brief introduction of what is happening generally. So the Fed meeting is around the corner. You can see the date. This is the 18th of December, 2024. So just before the Fed meeting, you can see a little bit of like a summary of what is happening and just the general macroeconomic picture. So Attu goes into each news event with a general picture in mind. Okay, so he has a general macroeconomic picture in mind, and then he sees if the event that he's currently trading impacts that macroeconomic picture and maybe shifts the price or the general story to a different narrative. Okay, if that makes sense. It's going to make sense a bit later. So yeah, this is the summary, but what is really important and interesting is this table right here. So if you don't know some of the terms that you're going to find in this text, you can see the explainer here. But anyway, let's zoom in on the actual table. Okay, this is gonna work. So these are all of the scenarios. Again, a Fed meeting is an event that happens 8 times per year, and it is an event where the central bank of the United States actually decides on current interest rates and future interest rates. So it's very important because the interest rates actually control the US dollar, and the US dollar is, I would say, the most important currency in the world. So if the interest rates of the US dollar go up, that means the dollar is gonna gain value and the euro US dollar is gonna go down. But if the interest rates go down, that means the dollar loses value and the euro US dollar goes up. What does dovish and hawkish mean? Dovish means that in the future, Fed is going to cut rates. And hawkish, that means in the future, the Fed is going to raise interest rates. So dovish is negative for the value of the dollar. Hawkish is positive for the value of the dollar. Okay, so you have 4 scenarios. You have the dovish scenario, you have the moderately dovish, moderately hawkish, and a hawkish scenario. You can see he gives a probability for every single scenario. There's an outcome table and the anticipated price action. Now you can read into this a bit more. I'm not gonna go too deep into this table, but this is basically a trading plan. So if, let's say, the Fed meeting turns out to be dovish, then basically THA will, let's say, buy the euro and the US dollar because the dollar is expected to lose value. But if the Fed meeting turns out to be hawkish, that means the dollar will go up, so dollar will gain strength, and you can actually sell the euro and the US dollar because when the dollar gains strength, the euro should lose strength accordingly. And you can see in the press conference, if we get like 2 cuts for the next year, so for 2025, that would be a hawkish scenario. But if we get 4 cuts, so 4 rate cuts, a forecast of 4 rate cuts in 2025, that is a dovish scenario. Now it is a lot more complicated than that. I'm just trying to give like a brief overview. But if you want to go into it in a bit more detail, you really need to read through all of these texts and you need to like devote some time. So that was the forecast. That was the trade plan going into the Fed meeting. Now the Fed meeting happened and these were the post results of the Fed meeting, and we're gonna see if THA made any profits, did they lose money, or did they stay out of the event? So let's click this post now, reviewing the FOMC and the BOJ. So BOJ is the Bank of Japan. We're not gonna go into that event in this video. We're just gonna focus on the FOMC. So you can see the FOMC review. The Fed was consistent with our hawkish scenario. So it looks like a scenario that they predicted actually did happen, and there was a statement pointing to 2 rate cuts next year, and the press conference included some fresh and unexpected hawkish commentary from Powell. So he said that the rate cut that happened in the actual Fed meeting was a closer call and that the progress on inflation was slower than hoped. That means that the Fed is being hawkish, so they are afraid of inflation. They want to raise interest rates to actually battle inflation. What does that mean for the US dollar? The US dollar is actually expected to gain value. You can see here on this chart. So this is the DXY, the dollar index, and it actually gained value. Or the Euro US dollar, you can take a look at the Euro US dollar and it is gonna go down. Okay, so when the DXY goes up, the Euro and the US dollar is going to go down. So need to see further progress on inflation to cut more rates. THA went aggressive dollar long after the statement, given the market did not understand the details of the statement. And overall, it was the most hawkish Fed press conference since June 2021. So US dollar gained 40 pips in the first minute and then continued up over 130 points until finding a new level. So if we zoom in on the actual table, I removed the camera view so that you can see this a bit more easily. These are all the scenarios. Remember them from our last post that we just analyzed. And you can see what happened. The green one, here this one. So the hawkish scenario that had just a 15% probability of happening actually happened. So what happened? Well, there was a statement before the press conference and the statement flagged inflation risks, also cuts for 2025. So cuts for the next year were announced at 2 cuts, not 3 cuts, not 4 cuts, but 2 cuts. And that is a very, very hawkish scenario. And then the press conference actually kind of repeated what was said in the Fed statement, and Powell, the head of the Fed, was concerned about rising inflation. So when he's concerned about rising inflation, that is hawkish, and that means the US dollar is going to go up. And just a quick side note, so why does Trump want low interest rates? Well, he wants the US dollar value to go down. He wants the dollar to be cheap. He wants to attract foreign investment. So Trump doesn't like a hawkish scenario. Trump would actually like a dovish scenario. He would like the Fed to cut as much as possible in order for the value of the US dollar to go down so that the USA can attract foreign investment. That means it's going to be very, very interesting what is going to happen in 2025. And there's going to be a battle between Trump and Powell because Trump wants to cut rates. Powell, at least in this last press conference, wants to raise rates. So yeah, it's gonna be pretty fun. But anyways, anticipated price action, US dollar up 40 pips, but to continue gaining even through the press conference. So press conference must be hawkish with such rhetoric upgrades. US dollar could break several key technical levels in this scenario. So this one actually happened. And also, what it states here is that THA again went aggressive dollar long after the statement. So they did actually make some nice percentage on this particular trade. So how did the price action look like on the euro and US dollar? This is the 5-minute chart. Here are our news events. So on the 18th of December at 7 p.m. you had the Fed statement, the interest rate decision, as well as the statement and the economic projections. And then at 7:30 p.m. you had the Fed press conference. So what you could have done if you had the same reading as THA, you could have waited for the press conference to happen and then either execute a sell position, because remember, both the statement and the press conference were hawkish, which is good for the US dollar. That means the euro US dollar is expected to go down. So after this after the statement, you could have gotten short, maybe on this candle, or let's say on this one, or you could have waited for the first 5 minutes of the press conference. So let's say worst case scenario, you waited for the first 5 minutes of the press conference. You got in, I don't know, maybe a 20 pip stop loss would visually look good here. I would maybe even go a bit bigger. And you could have potentially extracted some profits if you used a trailing stop loss that I like to use and that I personally use in my trading. It would probably be like a 1-to-1 risk to reward, something like that. But again, if you could have read the statement on time, you could have gotten in even higher, somewhere, let's say around here, with a 20 pip or 30 pip stop loss, and you could have potentially made a 2-to-1. So yeah, that's pretty cool. And that's our news event. So I would not say that this was like a home run trade for THA. I think this was just one of the regular high probability trades that they execute throughout the year. And I think THA usually aims for like a 2-to-1 or a 3-to-1 risk to reward. So nothing major, nothing crazy like a 10-to-1 or a 20-to-1. Again, this was not a home run, but you can see how with a simple trading edge and by reading the overall narrative of the markets, and then reading the press conference, you can pretty much forecast if the dollar will go up or if it will go down by looking at what will happen in the press conference. So you can create all of these scenarios, 4 main scenarios. You can see what will happen in the rate cut, the statement, the projections of cuts for the next year, and then the press conference, and just write down what do you anticipate in the price action. So in the dovish scenario, you expect the dollar to lose a lot of value. In the hawkish scenario, you expect the dollar to gain a lot of value. So I would say that this is a pretty cool edge and a pretty unique way of approaching the markets. It is more of a scalping style of trading, so it's not like swing trading. You really need to be fast and you really need to know what the press conference speaker is saying, and you need to basically interpret what he's saying in real time. So you need to be fast, but if you can do it, if you can interpret the whole narrative, interpret the press conference, you can make some pretty steady gains throughout the year. Again, the Fed meets 8 times per year, and you have a lot of other central banks that you can take a look at. For example, the ECB, European Central Bank, BOJ, Bank of Japan, Bank of England. So you can pretty much have like, I know, 30 to 40 events per year where you do this sort of stuff, and that's a pretty good trading edge. And you may be wondering, well, why doesn't THA execute a position before the news or during the initial news? Because again, there are 2 news events when there is a press conference. First, there is a release of a statement and the dots, so the future rate hikes or cuts, and then half an hour later you have the press conference. Well, when news is initially released, you have algorithms and you have basically programs that trade extremely fast. The price gets extremely volatile, the spreads expand, so your edge is really, really small. It is extremely tough to make a profit in the first minute or 2 once a number, or let's say a statement, is released. So I would highly advise you guys to stay away from trying to trade the news in the first 1 or 2 minutes, but by waiting for the press conference, so by waiting half an hour, the price kind of calms down, and also programs have a really tough time of actually reading into the press conference. So I have tried feeding ChatGPT with all sorts of different press conferences in the last 3 years, and the results were pretty bad. So ChatGPT really didn't know if the press conference was dovish or if it was hawkish. A human, I would personally say, is still much better at assessing of what the macroeconomic picture is, what the narrative is, and also what the speaker of the Fed is actually saying. So by his tone and by the words that he's using, is he hawkish or is he dovish? If you want more information, I know this is pretty complicated, but again, trading fundamentals especially can get really, really complicated. So I highly recommend you guys read the Substack of Attu Kokkilla. I'm going to put it in the description. Again, this is the guy that actually runs THA, and he has around what was it, 20 or 25 million dollars under management. So now I want to go over a new feature that Darwinex has. As you know, they introduced permanent allocations where you actually pay a fee and then you must hit a specific profit target and then you get a 100,000 euro allocation. So kind of similar to prop firms, but there is no drawdown penalty and all of the information is on their website, but I'm just going to quickly run through it. So if you click I want it, the new feature is that you can have an instant allocation. So if you pay 1,045 euros, in my case, you can get a instant 100,000 euro permanent allocation, okay? Or if you want to hit a target quote and then unlock an allocation, so you can see the cheapest one is 145 euros. You need to hit a 20% profit target. Most expensive is 495. You must hit a 5% profit target. There is no drawdown limit, so you can pretty much trade as you like. But also, please remember that your profit split is still 15%. So let's say you buy an instant allocation and let's say you have the 100,000 euros and you make 10%, so you make 10 grand. Your profit split is going to be 15% of that 10,000 euros. Okay, so that is really important to mention because on most prop firms, you're going to have like an 80% profit split. But most prop firms are like casinos and they do not take your trades. This is real trading. This is real capital. You have real money backing up your strategy. So that is why you have a realistic profit split. 15% is something that is normal in the hedge fund industry. So hedge fund managers usually get like a 15% profit split of all the profits that they make. So let's say that a hedge fund manager makes, I don't know, like let's say $10 million in 1 year. He's only going to get 15% of that $10 million. So that is an industry standard. That is how it goes. And this is a pretty cool new feature. So if you want a instant allocation, you can pay 1,045 euros with Darwinex, and then you don't need to hit a profit target. You can go into as much drawdown as you want, and any profits that you make, you can withdraw. And the final part of the video is going to be my personal Darwinex ticker. That is OHGE. And my return has been plus 6.69%, so kind of similar to THA, but the max drawdown is not that great, so it's minus 9.84. What is really important when you're assessing a trading strategy, that the return to drawdown ratio is at least higher than 1. Unfortunately, mine is not higher than 1. My return is lower than the max drawdown. But again, this is a pretty small track record. I only started this back in April of 2024. So it's not even a year of trading performance. So I still have a lot of trading to do. And these numbers they really do not represent my profitability. I need a really, really big sample size in order to get some reliable numbers. So this is the equity curve, made some good money in the beginning, and then in July we had some massive trades on the JPY pairs with the Bank of Japan doing an intervention, and then we were pretty much flat or a little bit negative for the rest of the year. And now we're pretty flat because I haven't taken a trade in quite some time. I haven't had any high probability opportunities, so that is how it goes. I must sit on my hands. Again, we had Trump coming into office. We have the Fed meeting tomorrow. Today is Tuesday. The Fed meeting is on Wednesday. Those two events are very market moving, and the markets have been kind of flat and range bound because everyone is waiting to see, or they waited to see what will happen with Trump coming into office. What will happen to tariffs? Will he put on a lot of tariffs? And also he wants to keep the interest rates low. So he wants the Fed to cut rates. So now everyone is waiting for the Fed. Will they cut rates? Will they keep them the same? Or will they announce actually hiking rates? So will they start increasing rates? Everyone is waiting on that. That is the reason why the Forex market is a bit, or has been a bit flat and stagnant, and the reason why I haven't been getting a lot of trading opportunities. So my plan is to just keep on trucking, keep on taking trades, building up this track record, building up this account. I have been so close to an allocation on a number of times. So if I actually closed some of these trades in profit instead of letting them run, there was a trade here and here, I would have gotten a 30,000 euro allocation. But again, I must stick to my plan and I'm just gonna keep trading because I know what I'm trading works on a large sample size. Also, if you're wondering what is my Darwin risk, it is currently at 0.55. That means if I take a 1% risk trade on the Signal account on my personal IC markets, it is going to translate into 0.55% on the Darwinex account. Okay, so it's kind of like half of the position size. If I take, let's say, a 1% position, it's going to be 2 times smaller in terms of percentage on the actual Darwin account. And that would be about it for this video. Thank you guys very much for watching. If you did like this sort of a case study, I'm definitely looking into doing more of them. So finding more successful traders, breaking down their trading edge, seeing how they attracted such big sums of capital. And a big thing for a trader who is just coming into the game and making his, let's say, track record is actually attracting capital. And both THA and Vuk Vukovic have attracted millions and millions of dollars of capital. So we can learn a lot from those two traders. If you want to learn how to go from zero to consistently profitable, definitely check out the link in description. Go to zentumtrading.com. So we just added the pound US dollar and New Zealand Japanese yen into our trade gallery. So we took all of our trades from our backtesting and live trading from 2021, 2022, and 2023, put them into the trade gallery. I think it's around 60 or 70 trades so that you can go through it, see exactly what our trading edge is, and then adjust your own personal trading edge and maybe start trading those currency pairs. So definitely go to Zentum Trading if you want to check that out. Thank you very much for watching, and I will see you in the next one.